Welcome to Access Moneynomics by Access Mutual Fund.
Welcome to Access Moneynomics by Access Mutual Fund. Did you know India has nearly 11 crore demat accounts, which is not even 10% of our population? Moreover, 56% of Indians reported that they did not know how to effectively handle their finances. These numbers say a lot. Firstly, not enough people may be participating in financial markets, and many don't do so because of the lack of clarity, which is why we bring to you today's episode. Stay tuned to know how to choose among the many investment options and get started on your financial journey. Hello and welcome to another episode of Access Moneynomics. This is your host and money mentor Rashmi from Access Mutual Fund. In this episode, we will introduce you to some popular investment options and help you choose what's right for you. Now, before we start, don't forget to follow our podcast. Let me tell you, one risk in life and investments is not taking risk at all. If you have been following our podcast, you already know how important it is to invest if we want to protect our wealth against inflation and give our money a chance to grow. Wisdom tells us that the best time to plant a seed was 20 years ago, and the second best time is now. But in terms of investing, most of us are still wondering which seed to sow. Well, so how do we make these investment decisions? The first step is to know the options that you have. In the last episode, we discussed equity and debt markets with Hari. If you haven't listened to it, go back to the previous episode and give it a listen for a super simplified explanation of financial markets. Coming back, some widely known investment options include asset classes like stocks, debt, gold, real estate, and many more. As we discussed earlier, investing in a company's stock or equity offers the scope of profiting from the growth of the company. Now, because the performance of the company can go in either direction, stocks are suitable for investors who can take high risk. Also, stocks are ideal for a long-term investment horizon, and that is more than 3 years. Another interesting option to consider is debt or fixed income. You can invest in debt options like corporate bonds, government bonds, or debentures. When you invest in debt, the issuer is obligated to pay you interest or coupon regularly. Of course, there are various kinds of risks involved here as well. But however, debt or fixed income investments are typically considered to be less volatile than equity. So they may be an option for those who aim for stability and regular income and are not comfortable with the high risk that comes with equity. Debt offers many options for short-term investors, but there are also options for medium and longer durations. Now let's talk about gold. Gold is considered as safe haven asset because it has historically hedged against inflation. Nowadays, there are many ways to invest in gold like gold bonds, gold funds, and so many more. Then there is real estate such as land or property, which offer the scope of appreciation as well as rental income. And then there are many more, but let's stick to these for now. Now that I have given you the ABC of these popular investment options, don't think that one option is clearly better than the other. It all depends on your financial goals, your risk appetite, and your investment horizon. That is how long you wish to stay invested. By the way, an ideal way to invest for an investor is by diversifying across asset classes. Remember the saying? Don't put all your eggs in the same basket. You may invest some of your amount in stocks, some in debt, some in gold to meet your different goals. Remember, we discussed goals in our very first episode. And by the way, this is true even if you have very little to invest. But now, how does this help? Well, if one thing in your portfolio doesn't work at a given point in time, the other component can help limit your losses, so it doesn't affect your overall investments drastically in cases of extreme market events. One way to diversify investments can be via mutual funds, which invest in a variety of instruments. They not only allow diversification across asset classes, but within the asset classes as well. More on this later. Also, a lot of people think of insurance as an investment option. Well, I would say it's a must to get insured, but maybe look at it as a protection for your finances more than an investment. To summarize, there is no one-size-fits-all approach. You need to decide on where to invest based on your risk appetite, your risk capacity, investment duration, and financial goals. Moreover, diversification can help protect your overall investments when some instruments in your portfolio are not performing well, and also give you a chance to accumulate wealth. Are you ready to start investing? Well, that's all for today, folks. Thanks for listening. Remember to follow our podcast Access Moneynomics so you don't miss out on any interesting topics. Until then, this is your host Rashmi signing off. You just listened to Access Moneynomics by Access Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.